Judge. As always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate
everyone.
frisk. Always do your own due diligence on all ideas presented. Also, quick plug, our Halloween sale on Discord membership starts now. Buy the dip if you dare. Discord members get access to all of our ideas and alerts, stock briefings, our daily morning briefings, our price forecasts, our model portfolios, our urgent news and Catalyst AI bots, and our 10 plus hour video lesson library, and much, much more. Use the link down below to get a spooky 25% off discount on our annual membership. Okay, so let's start with market context. So ever since November 30th, 2022, there's been a big disconnect between the stock market and US job openings. What happened on that date? Well, that's the day that ChatGPT was released. This marked the start of Wall Street waking up to the fact that the next growth opportunity for equities was actually in companies getting rid of jobs, not creating them. And ever since then, you've seen more and more companies get applauded for laying off workers and instead investing that money into AI infrastructure. And in past economic cycles, when you saw just fractions of the current investment that's being spread into AI, well, you would see massive job creation, but not this one. Why? If you give $10 million to a tech company, that company goes and puts that money into a data center and maybe hires 3 people. Those centers will eventually help the company fire their current staff in different departments. Whereas if you give a mom and pop traditional business that same $10 million, well, they may open a few more shops and hire dozens and dozens of people who then help the company to grow and hire more people down the road. So the trillions of dollars in investment in AI is creating some jobs today, but not nearly as much as previous economic booms. And over the very, very long term, this investment will lead to widespread replacement. Over the next 5 to 10 years, the vast majority of new job creation is going to be way, way, way less than has been in previous economic cycles. And then long term, once AI gets very good, you're going to see massive job losses. And this is the calculus that investors and markets overall have started making since November 30th, 2022. At that point, investors started deciding to position very, very heavily into companies that are replacing offices with data centers and people with data software. And they've positioned correctly. Financial Times data shows that 80% of 2025 gains in US stocks have come from AI companies, and 40% of US GDP growth in 2025 has come from AI companies. And I actually think when the numbers are done for the entire year, it's going to be substantially higher than this. Now, at the same time as this, cash is crashing. The people who actually do have jobs in this economy, well, the cash that they're earning, the value is going down. And the cash that they're saving, the value is going down. The trash USD, when compared to the also trash euro, is down 12.5% year to date. Central banks around the world are dumping USD onto the market, causing an influx of more dollars into the market, which will then make this trend way worse long term. The US government is also continuing to print at an extraordinary pace, and the Fed is returning to unleashing unprecedented levels of liquidity and easy money and incentivizing the massive, massive increase in liquidity, incentivizing trillions and trillions of dollars in reserves that are parked in treasury bills and bonds to re-enter the market and broader economy. And what's this going to do? It's going to cause the US dollar to crash even further. Long term, the everyday person's going to get screwed out of their job, and long term, the everyday person's going to be screwed out of their dollar value. So what does this all mean in effect? Well, let me put it to you this way. There are 2 major trends that are happening right now. Number 1, the AI arms race is taking over the economy, will eventually cause massive job losses. And number 2, the USD is rapidly eroding, will eventually kill savings of everyday folks. Now, what will happen long term? What does this mean long term? Well, shareholders and other smart asset holders will get the majority of the gains, and regular folks without assets will see further buying power erosion. Their savings will erode, they will lose their jobs, and eventually, hopefully, they get bailed out by government through UBI payments. AI and the crash of the US dollar are 2 separate things that alone would completely disenfranchise the average person in this economy. But we actually have both, and that's why I'm so fired up to come on here and tell you that you need to be allocating into smart assets. You need to be somebody that's going to benefit from this trend, not be destroyed by it. Most people might not have the interest or might not have the extra cash to even protect themselves from this. But if you're watching this, I'm assuming that you got at least a few bucks to start allocating and thinking very, very critically about the long term here, because this trend is going to cause insane growth opportunities for folks that know about it and insane destruction for folks that don't. That's why we're working so hard to bring you ideas here and in the Discord. Okay, speaking of ideas, let's get to work. So we're going to go ahead and start with AMD. So back on April 14th of this year, we made a video saying, look, AMD is an obvious.
Okay. That was a lot of macro. Let's jump into a little breakdown here on Galaxy Digital. Right. You're gonna cough, Sam. You're gonna have to drink a salt. That's how this works. Okay, here we go. just can't figure out. This company does everything. Crypto, AI, and banking. Crypto trading desks. Okay. So they make money. That could be good. They did make money. Jeez. That's a lot. Transaction expenses. Wow. Okay, so that's not how much they made at all. Less than $1 billion in profit. Okay. Revenues jumped 9 billion to 30 billion. We have a data center infrastructure segment. This is their crown jewel. I did watch an interview with these people, one of these people that founded Galaxy. He seemed pretty legitimate. Okay. How many partners does Goldman Sachs have? Only about 30 to 50. Okay. We're a partner. Okay. Basically a crypto hedge fund. I don't get this. Do they lease? What do they do with NVIDIA? What do they do with CoreWeave? Seems like they do something, but I can't tell what it is. A lease agreement with CoreWeave. So are they leasing or are they buying the lease? That's what I can't figure out. Okay. What the heck? Lease agreement for phase 2 of the Helios Desert development. Okay, so it sounds like they are leasing. Galaxy leasing the data center to CoreWeave or vice versa. That's what we need to figure out. They are leasing it to CoreWeave. Okay. They own this data center. This is a lucrative business. $100 million a year lease revenue from CoreWeave. Okay. That's a lot of info. If you guys have comments, go ahead and drop those. Otherwise, we will get cooking here. As far as what's going on here, what do we got going on here? Let's see. Whoa. This is a NVIDIA connection for sure. But Don't think it has any connection to Trump. I don't think so. Oh, okay. I don't know about that. They made a donation to 1 million to the second Trump inauguration event. Okay. Okay, I think that's the play. If you have any questions, go ahead and drop those in the comments. Otherwise, we will get going here. Okay. Trump's AI stocks will make you rich. This isn't financial advice, but if you look at the run-ups in NVIDIA, and if you look in the run-ups in the data center stocks, there's one data center stock that is not run up yet. The ticker is GLXY, Galaxy Digital. They donated $1 million to the Trump inauguration this year. And the founder, CEO, is a former partner at Goldman Sachs. They only have like a few dozen partners. This company, Galaxy Digital, is leasing one of their data centers to a company that NVIDIA invested in. I think this company has a lot of room for growth. Let's jump into the chart, a little info about the business. This is Galaxy Digital.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is the donation from Accountable US of $1 million to the second Trump inauguration event. So could that be not quite what actually happened? You know, this is an entity, Galaxy Digital Services LLC. Sounds pretty similar to this public company, Galaxy Digital. So yeah, that's the connection. And, you know, never say never as to whether or not there's a connection between Trump and this company. I think there is a lot, just in the sense that they're in crypto at all. They are a crypto trading firm largely. However, they also have data centers, and they're leasing those to CoreWeave, which is the NVIDIA invested company. They also gave a loan. Basically, this big loan was given to MoonPay. You may have heard of their ads on, you know, some financial news outlets. MoonPay has been advertising. They're trying to be the next like Coinbase place to store your crypto. And yeah, that was related to the Trump meme coin. So that's a little bit more of a specious link, but I think the donation is telling. And then it's for what these guys actually do. So I talked about the crypto trading, and that's definitely how they sort of started. The Goldman Sachs former partner was at a hedge fund before that, running it, and then he moved into crypto. What's interesting is, as far as money, like they have 500 million of net income. Okay. But because they measure trading volume, their actual revenue is in the like 20-30 billion range. So you have to ignore that. You know, it's kind of like seeing Amazon has multi-trillion of revenue, you know, when it's their gross merchandise value. That's different. This is significant though. Over $17 billion of assets on their platform. And this is a sale. They executed 80,000 Bitcoin. So like an OTC transaction. So they definitely have the connections. They have the software to make a transaction like that. And they have the NVIDIA connection in a way by leasing their data center to CoreWeave. This is one of their campuses. I believe it's in Texas. So they get about a couple $100 million for that lease from CoreWeave. Maybe a little less, maybe a couple $100 million in total for all their leases. So it's a significant source of revenue. And we'll jump into more about, what they've been up to. But this is the chart, okay? So this is the level we're talking about. We've got a sloping up moving average. We've got a peak here, and you got an opportunity to buy after earnings. Typically, I wouldn't think buying after a downtrend after earnings is a good idea. I mean, sort of an up and then down trend. If you look at other crypto-related names, Coinbase, just reporting earnings. So we'll see what happens here. But in general, I mean, MicroStrategy is a bad example because this company just has been going down the whole time. But this earnings reaction doesn't look like it's going to save the company, but it didn't go lower like Netflix is. So we'll be watching those, but also going to be watching, of course, Bitcoin. So this is a higher low for Bitcoin. Ethereum, not quite as pretty, but this has been good because Bitcoin looks pretty ugly, right? I mean, if it can hold this level, that's basically the breakout level from July. And of course, Galaxy Digital is going to be very related to crypto. So this is a breakout a little after Bitcoin did, but still, they are, of course, correlated. So a little more info about Galaxy, just to make sure you're buying something that makes sense. Besides the Trump sort of linkage that I mentioned with that donation, this is the big deal. I think it has to be this data center pivot, because if you look at a lot of Bitcoin mining companies like Mara or Riot, they are also trying to move into data center compute provision to basically serve OpenAI and Anthropic, which Google has a stake in, or Amazon has a stake in, I believe. I believe Amazon's beat on revenue was based on that Anthropic stake. So something to be aware of. It kind of makes this beat less significant because it's not actually related to Amazon's core business, but something that's very topical and current to focus on those Mag 7 earnings, specifically the ones that beat, which Amazon and Google and Apple did. Meta down on that tax recognition, $15 billion approximately. So this is Galaxy. That's the level. On a 5-year chart, there's about 32, maybe 35 is relevant. You can see 35 right here. It got up to 45 here, but it's definitely been, a minute. So we'll see if it can hold that level. It's obviously these people don't still own the stock most likely, but still it is psychologically pretty important. I mean, the volume here compared to back here is, what is this, like 100 times higher? I mean, this is 1 million and this is 50 million, whatever. Maybe I guess it's only 50 times. It's hard to see down here what the volume is, but it's a ton more volume. And the volume on earnings itself, this is sometimes relevant. If I look at a daily chart, just to get an idea of how worried you should be about buying a stock that had a sort of negative earnings reaction. If this candle had a really high volume, that'd be a little bit more concern. It'd be indicating a lot of selling pressure here. But really the buying was here on day one, on earnings day, with a lot of volume. So it didn't actually move. This was the 21st. So we can also look and see if the market played a role there. I mean, kind of a sideways day for the market. So nothing too concerning there. If the market had a big up day and this didn't move, well, that'd be bad, So not a ton of selling here. And then not a ton of selling here either. So basically what that means is that this may be less worrisome than it initially looks. You've got a downward channel, but the volume gives some hints as to how this 35 level could hold. So that's a lot about the chart. I think the chart is pretty important with this one, given it's kind of a new-ish company, and also how they're pivoting to data centers. Their past sort of price history might not exactly represent that business. So, I mean, there are things you could dive into here as to how their crypto business was doing, connections to other companies. But this is probably the most important one for that vertical, CoreWeave. So Coinbase is important. The price of Bitcoin is important, that these sort of hold up. But also CoreWeave is going to be important if this can break out, because if this is their customer, you want this customer to be doing well. So that's the idea. That is Galaxy Digital, ticker symbol GLXY. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. You can join for $25, and I'll see you in the Discord on Monday. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's see what else we've got cooking over here. Whoops. Don't want to watch me. It's boring. Let's watch Charlie.
Buy. It's one that should be bought nonstop, and it's one of the most overlooked stocks out there. It's the runner-up to Nvidia and is getting a lot of the insane overflowing demand because their lead times are way, way better. And at the time, it was trading at the $95 region. And if you look at it today, it just hit $264 at highs. It's heading closer and closer to a 3x, which is beautiful. Now, a lot of times, folks, we're going to make a call out on a stock, and maybe it goes up immediately, or maybe it doesn't, and maybe it even goes down. And a lot of folks will judge the success of the call out based on whether it immediately does well, which is the worst way to judge a call out. The minute that the stock has one red candle, people jump ship and they're like, oh, this must be a scam stock. And they go and they chase some other new shiny stock, which then that one too starts selling off and they have to chase again a different stock. If you're somebody who consistently loses money in a bull market, it's probably because you have shiny stock syndrome. Always trying to chase the next runner without ever trying to think, okay, well, what's the bigger picture? Now, the reason I'm saying all of this is because AMD is a stock that many folks considered a failure because it didn't go up right away. It didn't perform immediately like people wanted. However, long term, and it wasn't even that long term, well, the value became obvious to markets. So anyways, what's the trajectory moving forward? Well, if you're in the Discord, you know that we see AMD as a $958 stock by 2030, which puts this stock at about $1.54 trillion in market cap, quite the jump from today's market cap at $422 billion. We've also alerted calls on this multiple times over the last couple of years, and I highly recommend you take a look at those calls in the Discord. In terms of further calls, I suspect we're going to be making more call option alerts on this, specifically stretching out the next couple of years because we do see a decent amount of valuation to fill in. Okay, next we got to talk about NVIDIA. So NVIDIA this morning became the first $5 trillion company. And there's a saying in markets that say you got to always follow the money, but a lot of people that have been calling NVIDIA an overhyped hype bubble simply haven't followed the money. Now, back on August 23rd, 2023, when NVIDIA was trading at around 1/5 the current valuation, we made a video explaining that yes, NVIDIA is going up, but it has way, way, way more to go by sheer nature, that the earnings are climbing at the same, if not at a greater pace than the price. What you're actually paying for, the earnings, the actual earnings that you're getting per share, well, that's actually a much better way to gauge if something's overvalued or not. And this is something that we've been saying for years with NVIDIA. You can look at all of our public videos, and those predictions have now aged like fine wine. That said, don't expect the same extreme growth rates that we've seen the last couple of years to happen over the next couple of years. Expect more maturing and more steadying out, but still nice outperformance growth when comping to the overall market. If you look at our Discord price forecast, by 2030, we see NVIDIA hitting $339 a share. That's still a lot of upside, but it's nowhere near the risk-reward profile that we had back in 2023 and before that. On top of that, you got to keep in mind that the PE ratio today is trading within normal range for Nvidia. So if you use the same metrics we used to judge Nvidia back in 2023, well, in 2025 at current prices at all-time highs, Nvidia still looks like a buy. That said, why do I think the growth rates are going to drop? Well, because long term, I think what you're ultimately going to see is the scarcity that Nvidia is enjoying right now that allows them to charge whatever they want. Well, that's going to steady out a lot, and chip costs long term are going to fall. That's just simply how new technologies go, which means long-term growth rates are going to mature out a lot, and you're going to see Nvidia still be the top dog,
$35.
but chips are going to become more of a regular commodity versus something that nobody can get their hands on. Okay, next, Palantir. So Palantir officially hit highs at 198 this morning, heading for a rush into the 200s for the first time ever. And this comes as Nvidia's CEO just said that Palantir probably has the single most important enterprise stack in the world. Now, context here, Palantir is perhaps our most famous pick of all time. And the reason that this is a famous pick of ours is because when the stock was down 72%, it had just hit $7.28. Well, I made a very contrarian video on it, and I said, yes, it's down huge, but this is actually an insane opportunity. It's not something to fear, it's an opportunity. I presented the facts, not the fear, and this was back in 2022, and I continue to do so for many years. And by the way, I understand that now everybody thinks Palantir is great, but if you weren't around back then, you don't understand. Back then, everybody said Palantir was going to zero. It's a garbage meme stock. I know it sounds crazy today, but that's the story back in 2022. If you're somebody watching back then, you remember every article was like, oh, at $7, Palantir is overvalued. At $6, Palantir is overvalued. It's hopeless. Nowadays, a lot of those same writers are saying that Palantir is screaming buy at 198. Well, where were you when it was at 7? Said at the same time, you got to understand when a stock is plummeting, when it's been plummeting, your body, your emotions, everything is going to tell you that that stock is a garbage scam. How could it not be?
APLD
It's
just
down.
had
That's
earnings.
just simply human psychology. But the way to counteract this, and what we said back in 2022 and what we will say during down cycles for any stocks in the future, is you don't want to just look at the stock price. You want to look at the actual business itself. If the business
I
is
agree.
going like this and the stock is going like this and there's a huge valuation gap, well, that's an arbitrage opportunity. That's not a reason to panic. And that's why we made countless videos explaining why this was a buy, not just at $7.28, but virtually every price over the past few years.
All right, let's jump into a little breakdown here on APLD. This $35 stock has crazy potential. Nvidia invested in them, and they have an Nvidia-backed company as one of their tenants. So they are a data center supplier. They have a 15-year contract worth up to $10 billion or more with CoreWeave, who has also been invested in by Nvidia. A lot of Nvidia connections here. I think this company has massive potential, even though it's up a lot right now. It's still forming a flag, and it just had earnings. Let's jump into the chart. This is not financial advice, but looks good.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So I think this is the clearest part of Applied Digital, as you say, well, it's up from 5 to 35, right? But when it's up that much, percentages start to sound silly. You know, when you talk about open door and you say, oh, this went from 2 to 6, I wouldn't buy that. It's like, well, you're right. If you bought it at 6, it wouldn't be a good time to buy, but there were opportunities. There was a second flag at 540, and then it went to 10, so it almost doubled from there, depending on how you measure it. So look, I mean, there's a ton of volume. This is billions, you know, so $5 billion a day or more on open door. And on Applied Digital, quite a lot of volume as well. So somewhere in the $3 billion up here. And they just had earnings, and the earnings candle is basically holding. If we set this at 35 and change, you know, it's just below there. So that's a pretty important level. If it can get beyond, I mean, it closed down at 32. So 35 is really the opening on the morning after earnings. So that's generally why I wait for earnings to close. In my opinion, that makes more sense to not only risk off that level, so 33. So, it's sitting right there, but also because if you look at, say, Meta, well, it just went down. But if you look at Microsoft, this is the example I was trying to bring up. This thing went up. No, it went down. Down on earnings and after hours. What am I trying to tell you guys? If you look at is Apple might be the example I'm thinking of. Okay, yeah, this is the example I'm thinking of. Popped up after hours, but if you buy that, anticipating a move up at open, you're cooked, right? So you really want to wait for a candle to close, a full day to close, and that's the close. So that's the level down here at 270, which it was basically trading at before. So there's been a lot of earnings. My head is a little scattered. Google obviously had an awesome earnings to start and then exhibited the behavior I'm talking about here to some extent. And then Amazon sort of closing a little lower, kind of the same idea. You want to risk off this level, not this level. Now, once it gets over here, then you can risk off this level. But because there's a lot of volume here, this is probably would be called the high volume close. So this is the close. It opened up here, closed down here, and it has a high volume. Whereas if you looked at GM, this is obviously the high volume day, and this is the close. So you risk right there, and look, the stock goes up. So we'll see what happens here, but you have a very clear defined risk. So all that to say, this is Applied Digital. This is the risk level down here, 32 and change, and it's holding over that. Okay, it did undercut it, but it bounced in this moving average. So there is buying demand above that line, which a lot of people have this line. This is a 20-day moving average. So it's a very common. It's almost as common as, just putting the volume on your chart, which obviously comes by default. Moving averages come by default on Robinhood too, and a lot of brokers. So as far as actual revenue, it's up year over year, but it's not a lot, right? 50 million. They are running at a loss. But they're also sort of part of this AI boom, sort of speculation boom, where it's like, yeah, could everything be hunky-dory and OpenAI is able to become hugely profitable? Then all these companies downstream are going to be beneficiaries of that, including Applied Digital, including CoreWeave. Applied Digital is a recent sort of mover. It had some euphoria, of course, in the COVID times, but only recently has it really made a massive move. And that separates a little bit from if you look at like quantum companies, they weren't really doing anything in the COVID times at all. So, does this mean that this is a little bit more of a lasting business than quantum? That was just that wasn't a fair example because quantum doesn't have a lot of revenue, right? If any revenue. So Applied Digital at least has 50 million. Some of these quantum companies have a couple million of revenue. And these data center contracts are lucrative. And then as far as will any AI companies, like consumer AI companies, actually, make a big profit besides OpenAI off this data center usage? That's to be determined. But OpenAI could go public too. They've been talking about that. Could be the biggest IPO ever. So here's the deal. NVIDIA is the investor. They had about $50 million dollars worth. And then they participated in a funding round. I think still this is their total stake. So sounds like they've done multiple rounds. So they're definitely committed. Now, I think this elite partner status might be kind of thrown around. Obviously, they're using NVIDIA GPUs and stuff because they invested in them. But what's important here is CoreWeave CoreWeave has some debt. They did get that $14 billion Meta contract, but still, CoreWeave needs to succeed for Applied Digital to succeed. So, yeah, this contracted revenue needs to become actual revenue over the next 15 years. That's a long time, but that's what needs to happen for this Applied Digital to succeed they can't succeed without OpenAI succeeded. Really, that sounds crazy, but that's kind of the sort of, you know, combination of events that now has to happen. So it sounds crazy, but kind of makes sense. Could Anthropic overtake OpenAI and use all this compute? It could. I guess that's another alternative that doesn't involve some scrappy startup just coming out of nowhere. As far as what else they sort of do, I kind of think it's just the data centers. This isn't like Galaxy Digital where they do crypto trading or anything like that. This is a big $15 billion contract with CoreWeave. And, you know, Galaxy Digital has like a couple $100 million that they're getting from leasing their data center to CoreWeave. APLD is getting 15, so billion, big difference. Well, 11 billion, sorry, 15-year lease. Now, as far as other locations, they are a little bit distributed to North Dakota as well as, yeah, I guess this is also in North Dakota. Well, I thought that they had data centers elsewhere, but it might be that they are still building that out. So we'll see what happens. One of the risks with data centers being built is people don't want data centers in their backyards. And it seems like the southern eastern US is more favorable to getting these built quickly, whether that's faster permitting or I don't know what it is. Alberta in Canada is favorable, and Meta is trying to get a data center built in Alberta. So I don't exactly know how North Dakota stacks up in that conversation. It's an important thing to track, though, because if they can't build them, they can't lease them. Obviously, there's a lot of space up there, but still, it's also cool. That's part of the reason why people like Alberta is getting some of this business besides the relaxed permitting in that province. And they need some actual money as well. They need to not have losses. So this is great to have 40 versus 25 year over year. But when you're talking about an $11 billion contract and you're making $50 million a quarter, it doesn't quite stack up in the way it sounds like it should. I mean, NVIDIA's margin is something like 70 to 80% on its GPUs. So this doesn't quite track. But APLD is the idea. I know it's up a lot, but it held over earnings. So that's a clear level. And you can sort of use that level despite the amount that it's up. It sort of rides that. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. You can join for $25. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. What else do we got cooking here?
And we presented very, very evidence-based arguments and followed up with it again and again and again, building conviction over time. Even when Palantir had missed quarters, we said, well, look at the longer-term trend. And I say this only because I know we have a lot of new folks that they think all of this comes easy, but that's not the case. A lot of this stuff was very, very difficult. And when you're on your own investing journey, please be prepared for the kinds of swings that we saw. So anyways, what about Palantir moving forward? You have to understand that the big advantage of Palantir software is that it isn't bloatware that companies hire to act like they are using AI productively. It's actually something that boosts productivity dramatically, and that's based on many, many case studies. Palantir's AIP platform is the real deal. It helps companies and governments plug AI directly into real operations. They're running AI boot camps that turn clients into power users within days. The translation, while they're not selling hype, they're selling usable AI infrastructure, which is saying a lot in today's society. This is also battle-tested in high-stakes environments. Palantir systems already power the U.S. defense, intelligence, and critical infrastructure sectors. That means its AI is proven where failure isn't an option and where failure failure can mean the loss of lives. And so in any situation where security, compliance, and reliability matter, well, Palantir is going to be the one getting the call. And then there's also massive stickiness through data integration. Palantir builds a full digital twin of a company's data and workflows. And once their AIP platform is integrated, well, it becomes the nerve center of a organization's data operations. So it's extremely hard to rip out, giving Palantir a powerful switching cost moat. What tends to happen, and if you look at the contracts and all the data over many years, is a company goes and they employ Palantir software. Palantir figures out how to best serve them. And as the AI model trains and really streamlines results, well, the company goes and spreads it out to more and more of their organization, meaning that Palantir is now an essential nerve center for the organization. And we just released our latest price target on Palantir yesterday in the Discord, and I'll show it to you here. Basically, if it continues to hit the numbers that we believe, the exponential growth that we believe and see is very possible, well, we see the stock heading towards $608 per share by 2030. This is assuming a 40x price to sales ratio, which is quite the crunch from the current price to sales ratio, by the way. So again, I actually see the price to sales ratio coming down dramatically, which means that Palantir is going to get cheaper for every dollar of sales. But the price is going to go up dramatically because their revenue is going to scale up dramatically, and long term, their profitability, I think, is going to be very beautiful, because software, quite frankly, is very high margin. Okay, next I got to talk to you about APLD Applied Digital. So we've been very bullish on data center plays because of the scarcity that we are seeing with the NVIDIA chips and AI infrastructure overall, and companies like APLD that actually have data centers stacked with these chips, in my opinion, have been long set to outperform, and we've been saying that all year. And APLD has been one of our biggest callouts in the space. This year, we screamed APLD was a buy at $4.53 back in April, and at highs this year, just recently, it hit over $40, and now it's cooled back down to the mid-30s. Now, if you go back to our Discord briefing on the 22nd, this is what we predicted happening. We said, look, you're going to see a pushback. It's just a question of percentage down. I believe the case A scenario here is still the most likely, that you're going to see a bigger pullback into the 20s before you see a sustained breakout to all new time highs. The bigger picture here is that the dip is going to be bought up. Why do I believe the dip is going to be bought up? Well, because data centers are, again, very scarce. There's endless money going into data centers right now. OpenAI themselves said they're planning on spending trillions upon trillions of dollars in acquiring AI data center compute. And APLD is one of the small cap players that has the positioning to benefit from this wave. There's also TeraWulf, ticker symbol WULF. Back on August 19th, we explained that data center play Wolf was screaming buy at $8.78. We made another video on October 8th when it was at $12.30, explaining why it still has crazy potential. And then it went up to $17.05 at highs, and now it's been selling off again. Ultimately, what you're looking at with Wolf is a stock that needs to breathe, but also a stock that has substantially more upside once the dip gets bought back up. I think that the tidal wave of demand for AI data centers will continue to drive Wolf as it has.
Okay. Let's jump into a little breakdown here. Here we go. Trump's energy stocks will make you rich. This isn't financial advice, but if you literally look at the price chart for this ticker, NXT Next Tracker, it's a solar company. Solar companies they track the sun, as does this one. So this jumped up 10% when it was announced that Trump's cuts to tax credits for renewable energy were not going to be nearly as deep as people thought they were. So Trump's favoring these renewable energy companies like NXT. This led to a massive run in NXT stock over the last few months. This company has research ties to the University of California, Berkeley, which is right across the bay from Silicon Valley. There's a big growth story here, and I think there's a lot of room to run. Let's jump into the chart and a little bit about how NXT stacks up against other solar stocks.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's a little info about NXT. So this was the move. We don't have to read the report. We can look at the stock chart. But Trump administration's plans cuts to clean energy tax credits would not be as severe as initially feared. So that was around August 20th. And if you look at the actual chart, you can see what they're talking about here. This is August, and this is the jump up. So kind of a rough earnings, and then totally made up for it, given that they're still getting some of these renewable energy credits. And since then, it's gone an absolute tear. Of course, the market making up part of this September run for sure. I mean, the market was going on a tear there as well. But you can see this company hasn't exactly tracked the market anyway. So this was very significant, that announcement. And is Trump basically solar, positive? Well, I don't know if you can quite say that. But in a way, as he becomes more and more basically beloved by big tech, data centers need solar because nuclear is going to take 5 years. Natural gas, environmentalists hate it. And there's a massive solar build out happening already. This company, First Solar, recently was contracted by BP to deliver 5 gigawatts of solar panels. And you need like 20 gigawatts to fulfill all this data center demand in the next 5 to 10 years, if not more, if not a lot more. So we saw the run up in First Solar. Their earnings is a positive reaction here for First Solar. And NXT, similar sort of positive reaction to earnings, but we have a little more information because it's been a couple weeks since they reported, and we don't have to look at the intradaily, although it kind of shows more prettily maybe what's kind of setting up here and how you have a low risk, risk of a couple bucks. And not only that, it's at this psychological $100 level, which is very visible to everyone. So of course this thing is an absolute skyrocket, but still, if you look at this sort of buying level, this is why it's okay to buy something that's up 60% in a couple months. Similar to Applied Digital, this is kind of the earnings season play opportunity, as you risk off of the earnings candle. In this case, it's over down here because it actually closed down here at the end of the day. So if you look at NXT, this one closed right here at a little under $100, and we can see that here, a little under $100 right here. So great thing right now is it's above that level, but not too far. So you can risk a couple bucks and try to make 10, 20 on next track. Of course, if it breaks through that, if the market totally tanks, you could sell out quickly. I mean, we don't know what the market's going to do. Could come back a few percent. This is, you can run your simulations on, I'm just going to get rid of this. The dozen times or so, the market has gapped up. Maybe this is maybe 3 days, depending on exactly how you measure it. This is definitely, that's a weekend gap up. That's why there's no candle there. But this is a huge move. This is 2.5% all green days. So could we come back? Yes. With that said, this still is holding up despite the market pulling the last few days. This day was green. So that's like a lot of supply and demand, price levels, information, which I think honestly is like the most important thing. But we also like to make sure that we're buying something that actually, is worth buying. And so I don't know exactly how favorable Trump is going to look at Nextractor in the future, but right now, certainly sounds pretty good. Of course, the tariffs is not friendly to Nextracker either. Not sure if we can see that on the chart. This was a massive tariff. This is more rare earths related, but still, Trump threatened tariffs across broad sectors, right? And it was because China said they were going to have to individually approve like rare earth companies who are shipping to the US. So Nextracker actually held on that date. So maybe the tariff thing is not such a big concern with NXT, which is very good if that's the case. It certainly looks like that's the case based on a couple of Fridays ago, which is definitely an important day because everyone was freaking out. I was like wondering what was going to happen, of course, just like everyone else. Stock market went down 2 to 3%. It's 4% even in a day. So, got to keep watching tariff comments, watch how it reacts to tariff comments, see if there's any news about renewable energy credits, and make sure that they still are basically the leader in tracking. I mean, it's literally in their name, but if they're partnering with UC Berkeley, that's about as cream of the crop as it gets. Maybe Caltech is up there as well. But this is definitely a legitimate. See, this is the connection. So it's actually real money. It's more than 5 million for projects there. They also have this agreement with a Saudi Arabian company. So this is a massive, massive market. They are, I mean, I'm not a Saudi Arabian expert, but the zeitgeist is them taking their oil money and turning it into data center and AI opportunities. You know, instead of building out their whatever $50 billion city or whatever they were going to do, that they had to sort of put that on the back burner. So I think there's a lot of appetite for renewable energy investments over there. This is another agreement they have that's, you know, not nothing, definitely meaningful, multi-years, and I don't know exactly how the Next Tracker stacks up against these other companies technologically. I'm not sure that's totally what's most important right now. If you just look at the actual price reactions, I mean, SolarEdge is not a company that looks super investable. It's also coming into earnings right now, so it's not the time for that. Canadian Solar is sort of a whole separate play. I don't know if you want to be investing in Canadian solar companies. I mean, there was a breakout here for sure, but earnings is coming up and it's pretty much parabolic at this moment. It is, you know, reminds me of like a Canadian uranium company, DNN, which did run with the others, but maybe isn't quite as clean as a UEC or a UUUU. 4 U's there. This was incredible. So another one to keep an eye on, ARRY, coming in earnings as well. So there's a couple earnings events that are important to watch, and also maybe helpful to see if First Solar can hold that level as well. If they're all holding, then that's sort of a vote of confidence for Next Tracker, even if it lags a little bit. And the TAN ETF also will just tell you if this thing rolls over, this is the solar ETF, then maybe NXT isn't the best place to put your money right now, even though talked in detail about that buying opportunity technically, where to buy it and why it's okay to buy even though it's up a lot. So that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to join the Discord, try it out for $25. You can head over to stockscommunity.com and sign up there. You'll see a couple testimonials as well. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. What else has Charlie got for us?
And I do think it is a better deal right now than APLD, but both should benefit from the rising tide of data center demand. Okay, Hood. So we've been big believers in Hood since the $18 region, and it's climbed as high as $150. And the truth is their business model is absolutely dominating during this bull market, and more importantly, the massive retail trading increase in the cycle is going to cause massive increases in almost every metric for this company. And with all of the new products and services and innovations that they're trying to pioneer, I think that you have a lot more excitement coming for the stock. And right now it is getting bought up from its current pushback, and this is something that we said back on October 6th was going to happen. We posted in the Discord, Hood bulls have been in control for many months now, with the stock firmly sitting within an ascending channel. The pattern has been tested multiple times with no breakouts yet. I expect the bears to eventually pull Hood outside of the channel, given the overall duration and aggressiveness of the uptrend. With that said, a few more pattern tests may be in order before this happens, and then that happened with the test of the lower channel trend line that is now breaking out. So I think the important thing with Hood is to keep in mind, look, long term, we love it, but it's also up a lot, and I don't like chasing. Chasing is ugly. Chasing freaks people out and creeps people out, and it's the same thing with the stock. I have noticed that when you chase a stock up, it gets creeped out and it goes right back down. So don't creep out your stocks. Require a good deal. Do not chase. Next, SoFi. So we've been huge fans of SoFi for years and years and years, and screamed it was a buy as low as $6.50 back years ago. And when Trump got reelected last year, we said SoFi was going to be a big benefactor of the student loan forgiveness flip. But the overall justification for SoFi's bullishness has always been that the sheer number of users in the platform have been growing, while their revenue per user has also been growing, which is a great exponential increase. And SoFi further confirmed this at their recent earnings report that just came out. So what's the bigger picture on this? Well, if you look at our Discord price target forecast, we see SoFi at $157 by 2030. I'm expecting lending to grow to 13.5 billion, financial services to grow to 7.5, tech platform Galileo and such to $3 billion, wealth and advisory and AI integrations overall to grow to about $2 billion, and other sources to be around $1 billion in the miscellaneous segment. And this would support a $27 billion in total revenue by 2030, and thus support a $157 per share price. Moreover, I believe that SoFi is so underpriced that even in the bear case, it has upside to $56 with much weaker growth rates. Now, again, it is a little bit easy and obvious to make these kinds of predictions because the Fed is in a rate cutting cycle right now, which should really start lifting a lot of SoFi's lending segments as refinancing and lending demand go back up. But more importantly than that, what this is really based on is that SoFi's membership is increasing massively, and all of those are potential people that SoFi can sell new loans to, can sell different financial services to, can sell almost anything to, and continue to build more and more revenue per user. And that's why we've long been SoFi believers and continue to be. By the way, if you want to get all of our price target forecasts and get them the minute that we post them, make sure to join us in the Discord down below. Coupon code Halloween for a spooky discount. Okay, main entree. So one stock that I believe is screaming buy right now is SMCI, Super Micro Computer. So let's face it, almost all of the best stocks in the market right now are trading at or near all-time highs. Many of them have farther to go, sure, but if you are someone out there looking for a great deal in the AI arms race, it's very hard to find one, especially one that's well down from all-time highs. There's just not much fear anywhere. But there is one name in the AI arms race that I'd argue still has a lot of fear attached to it, and you have an extra added potential premium if you can buy before the fear goes away, and that is SMCI. SMCI got priced for perfection early in the AI hype, then crashed as investors panicked, and there were some short seller fear campaigns and so on and so forth. But now, if you're looking at it, I mean, the fundamentals are very strong. The demand is growing rapidly, and the valuation is actually reasonable, especially compared to comps. SMCI is a great deal. It's trading well below its all-time highs. It's on a consistent uptrend. It's got lots of proof of concept, and it's largely misunderstood by folks. Now, context first. No, this isn't the first time we've talked about SMCI. Back on February 6, 2025, we made a video explaining that, hey, yes, SMCI is down almost 75% from the previous year highs, but it's actually screaming buy right now. And yes, the stock has gone up about 56% since I made that video. But again, if you actually look at what this company does and how central it is in the AI arms race, I mean, if you compare it to similar companies, it's greatly overlooked, and it's greatly misunderstood. 56% up on a recovery is very different from 56% above all-time highs. And we still haven't recovered to its own all-time highs yet. The market right now is way more willing to invest in AI. And again, trillions and trillions of dollars are flowing into AI investment. So why does SMCI look undervalued right now, in my opinion? Well, for starters, AI data center explosion. SMCI builds the high-performance servers and cooling systems that power AI data centers. They're very centrally positioned in this, and as companies race to expand AI training capacity, well, demand for SMC's hardware is likely to keep rising. They're at the center of the AI infrastructure arms race, and the market just hasn't really fully caught on to that yet. Number two, they're still priced like a regular hardware stock, which is a big mistake. Even though SMCI powers the AI boom, it trades at a low multiple compared to peers. Analysts think the market's being too conservative. Some estimates show.
Okay. Let's do some analyzing here. ATI is the ticker. Titanium alloys, stainless steels, castings, chemical energy. Okay. They compete with Carpenter. Carpenter has a massive contract with Alcoa. Its earnings was good, right? Long-term contract with Boeing, Lockheed, and GE. Revenue was up year over year. Okay. Earnings per share growth. Growth in earnings per share and revenue was up year over year. Okay. Did the actual earnings per share beat? I somehow missed that. It did. Okay. Lockheed Boeing. Gotta get rid of this whole. Lockheed and Boeing and GE. Okay. Do they have a name? Allegheny. This one stock will shock everyone. They are a steel producer, aluminum alloys. They compete with a company, Carpenter, that has Alcoa. I only recently learned about these other companies. Alcoa I had heard of. Alcoa is 20% plus of Carpenter's revenue, and Carpenter is a competitor to Allegheny, ticker symbol ATI. This company, ATI, similar to Carpenter, had solid earnings. So birds of a feather flock together, even if they're competitors. I do think ATI is the best buy right now. I think it will be a good buy going into the rest of this month of November. And I think their contracts with Boeing, Lockheed Martin, and GE are about as, blue chip as it comes for this sector. So let's jump into the chart. Let's jump into the revenue. It was a beat on earnings per share as well as revenue. And let's look at psychological levels as to where to get in. This is not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is a little bit about ATI, Allegheny Technologies. They're in Texas, and this is what they do. They do a bunch of different metal derivatives. Castings, forgings. I'm not a metallurgy, blacksmith, or a manufacturing expert of any kind, but I do know that when an earnings candle goes up like this, and then a stock trades sideways after, above that close, that's bullish. So not only is it good that the earnings was good, earnings per share was higher than the year over year, and it also beat its estimate, and also revenue increased year over year. It's holding that level. So if you look at its peer, Carpenter, also holding. You can see that more clearly here. This is the close on day one. Tested that level here and then held. So looks pretty good. And if you look at Alcoa, earnings reaction was not super pretty. But basically, if it holds here, basically where it was before earnings, that's probably a good sign, given they're a huge customer for CRS and for ATI. It would be positive to see them hang in there. Now, Steel Dynamics, another one with a positive earnings reaction. Little pullback is sort of expected after a crazy, 6 days in a row of green, kind of like the market, actually. So if we're looking at ATI as far as buy levels, over this 96 is important, and then it sort of matched here where it came down to about 98. So, give or take a couple dollars there, depending on how wide you want your risk to be. Now, if we look at a 5-year chart, this thing is up in the stratosphere. This is an important level if it gets there, 115. But that's from 2007. So before the Great Recession. So I don't know if that's something you even need to worry about just yet. When it does get up there, if it does, 115, 114, maybe sell half and then, hold the rest for a move up or trail one of these moving averages as they catch up. That's generally the idea on almost all the investments we talk about here. Sell half and trail the rest. Now, as far as Q3 earnings, this is what they actually were. Over $1 billion in revenue, up as mentioned. And then that earnings per share was a beat. And then as far as guidance, this is the range. So it guided higher, or they raised their outlook, but that was, that was actually really recently. So I guess we can trust that given that it's now released 3 quarters of earnings. So that's good. I mean, I don't think they're going to revise it again. They could. They can revise it at any point, I guess, and just put out a statement. But this is recent, so that's even better than I expected as far as when this guidance came out. What's happening here? Aerospace and defense is basically helping them. I don't know that they need to get Alcoa as a customer. It seems like they're, pretty set without that. But it would be great to see that chart turn up. I mean, this is the big 100-pound gorilla in the space. And I mean, it's been channeling for a while. So really to a 30 and change, if it can stay above there, I think it's still all systems go for steel, which means bullish for ATI. Now, as far as basically, who else they're connected to, these other tickers, Boeing and Lockheed Martin, are just slow. So they're not really investable. I mean, this earnings reaction is not great, but I don't think you necessarily need to see too much stock price appreciation, too much activity in these, too much euphoria. You're not going to, because they move so slowly, but also the connection to them, I think, is weak enough in terms of actual movement of money that it's not going to influence the price of ATI. And the reason I say that is if you look at some of these biotech stocks, ALNY or RYTM, some of the recent runners that have sort of broken out, and then you look at like Pfizer and Merck, like sure, Pfizer had this run, but it gave it right back. And then Merck, is barely moving at all. Novo Nordisk is kind of just drifting down. So I don't think, the huge players in the game necessarily impact, stocks on recent earnings. ALNY went up on earnings and stayed up. So I think ATI is safe from getting dragged down from the Boeings and the Lockheed Martins of the world, but it also gets that benefit of, the brand names. So they obviously are massive companies that have massive budgets, including GE. And the Department of Defense also is nice to be able to sell to the government. They have unlimited pockets, it seems like. So GE has been going up. GE earnings, kind of a messy reaction, but held up. And, you can't really blame them for that kind of reaction when it looks almost identical to Tesla's. So, and Tesla looks like it's in an awesome spot. It's a little choppy, but it's made this huge run. It was bound to level off for a while. I mean, you can't just make huge runs after huge runs. And when you do, well, this is what happens. It comes back down to earth little by little. So Tesla, side note, 450, pretty important level, and sort of bounced off a little, really bounced off here, it looks like, and holding. So definitely strong. It's hard to see exactly what we got going on here. Maybe 448 is pretty important. At some point, you are doing a little bit of astrology voodoo, drawing these lines. But what's important is you pick a line and you stick with it. You don't just pick it and then say, oh, it'll come back, and then the stock just drifts down, right? Okay, so ATI, if we're going to take that same logic, the level I would pick would be 98. I know I said 96 or 98, but why not pick the one that's a little bit closer than all the way back in July, right? I suppose for Carpenter, as an example, what's the level that actually held? Well, it was actually that close level. It was 300, 302, wherever it closed at, basically bounced off that. So that's not chance. I mean, it wasn't known that it was going to bounce down at this point, but what happens is a bunch of people buy on this day, and then their buys are all spread out here. And so what kind of happens for people who want to continue to work into a position is they use this close as sort of a barometer of like whether the stock's worth buying or not, or whether they can, get in safely without moving the stock up, or if some big position's getting sold off, if they need to unwind their position. This is the level that people look at, and this so happens to be 300, so it's also a whole $100 level. But that's all to say why 98 is the place for ATI, and I guess it did kind of bounce off there already. So 98 or 96, 98 is probably lower risk, literally. As far as what else to do with this company, I mean, you can track these companies, but again, they're going to be like Pfizer and Merck. I don't know how closely to actually take a look on. I don't know about actual contract values for Department of Defense or SpaceX. SpaceX is private. But if any sort of news comes out in general about steel and steel for aerospace or defense, this company is going to be affected. But if that sounds like too much, breaking news type strategy for you, I don't think you even need that. All you really need to do is just watch its peer. If this thing starts to fail, I do think ATI is going to have a rough time too. So that's the plan. Allegheny Technologies. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, you'll get a Q&A. You'll get live streams that answer common questions. You can learn how to filter through these stocks and pick the best one on a given day, rather than just seeing a bunch of ideas. Head over to stocksforme.com and see if that $25 7-day trial is for you. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. What else has Charlie got to say for us?
Show 40 to 50% upside if re-rated like other AI names. I actually think it's way more than that, but Wall Street's value in SMCI like it's 2020, not 2025. There's too much fear baked in here. Investors are worried about margins and accounting drama, but the fear is already priced in my opinion. If SMCI executes normally, that fear premium unwinds fast. This is a classic great business, scary headline setup. There's also big upside if margins improve. I think they're going to improve massively. SMCI is shifting from standard servers to high-end liquid-cooled AI systems. That mix could raise margins quite a lot. Right now, the market isn't paying for that potential, and that's the opportunity I see there. And they're partnered with the biggest AI players. They work hand in hand with NVIDIA, AMD, and Intel to build next-gen systems fast. Their ability to roll out new hardware early gives them a speed and innovation edge, and when chip giants win, SMCI often wins alongside them. And then there's also hidden value here that a lot of people are missing. The noise around regulation and volatility has scared off a lot of investors, leaving the stock very, very overlooked. But behind the headlines, the fundamentals are very, very solid. Smart money loves these misunderstood setups because small execution wins can drive big upside. There's also high short interest, which means squeeze fuel. With heavy short positioning, even one strong earnings beat could trigger a squeeze, and that's extra upside potential on top of improving fundamentals, which is the perfect recipe for a sentiment flip. There's also margin of safety for AI believers. If you believe in the AI build-out, SMCI gives you exposure to the physical side, the servers, the cooling, the power. The stock has run up, crashed, and now sits in a sweet spot where risk is already discounted, but the stock has shown previous proof of concept. And in totality, if you look at our price target forecast that we posted yesterday in the Discord, we see this as a $384 company by 2030. So the amount amount of upside as this company grows in this space is substantial. Substantial for the patient, right? I'm not talking about this being something that goes up tomorrow or next day or next week. I'm talking about something for folks that have quarters or years worth of time span and are willing to do their own due diligence on the stock and build their own conviction, right? Because that's what it is at the end of the day. In any case, we're going to go ahead and alert
Sounds like
call
a lot of
options
work.
leaps, which means farther reaching in terms of
important to do
date
some
of
due
expiry,
diligence, but you don't
call
get
options, and they're going to be
married
posted
to
in
a
the
stock.
Discord shortly after I post this video. If you aren't a member yet, make sure to join with that Halloween coupon code link down below. Have a good one, folks. We'll see you in the next video.
All right. What else have we got going on here? Chris, same. Oh, wow. 38 minutes ago. Okay. If you guys have any comments, you can drop those in the YouTube. Oh. Yeah, this is the most recent. I mean, obviously 30 minutes ago, but
out with Coach tonight, man. I wanna kind of push something on you guys that's going to not only lead to near term
what are we doing? Coaches pause.
success, but more or less longer term success for you guys. And so listen, man, I want you guys to come on in, spend your Saturday night with Coach. We're going to have a nice one today. We are going to talk about 5 stocks that's under $100 that you guys could use, get, invest in, that can do wonders by you. Okay, Shanae, how you doing? Let's get on in here. And so listen, as you guys come on in, let me know where you're from. Let me know how your week went. Let me know who you think gonna win the World Series. And then, guys, let me know if you're ready to make some money this week. Charms, what's up, family? Anton, what's up, family? Guys, come on in. Let me know where you from. John, I see you. Detroit in the building. Kansas City in the building. Long Island in the building. Lamont, what's up, family? I see you. Dallas in the building. Dodgers all day. I already get it, man. Chicago in the building. ATL in the building. Boston, what up? Buffalo, Philadelphia, Chicago. Okay, y'all all feeling this thing today. Okay, that's good stuff. That's good stuff, man. Let me know where you from. Let me know if you made money this past week, but more importantly, if you're ready to make money this week, okay? Listen, man, I want to give you some gems today, okay, guys? So I want you to just follow along, kick back, put the game on if you need to, get a cup of tea, get a cup of coffee, and just rock out with Coach for a minute. Vegas in the building. So listen, man, I got a few plays. All right, we got through the Fed rate cut. Let me just quickly overview the market. Okay, we got through the Fed rate cut decision. 0.25 was the basis of the cut. It looked like we might get some more cuts throughout the remainder of the year. That is yet to be determined. So again, they keep kicking the can down the road, which keeps serving and acting as a catalyst for us, okay? So understand that. But with that being said, man, listen, in a bull market, there's still opportunities, even though we're at all-time highs, okay? And Jamaica, I want to send some prayers for Jamaica. And just because Michigan is in the building, Monique, what's up? Coach is live, absolutely. Listen, and so just because we're in a bull market and at all-time highs, it doesn't mean that everything has to crumble right now. Matter of fact, the market can stay irrational longer than you can stay solvent. It can keep going up, and many people are trying to time the market, are trying to predict a crash. Guys, just go with the flow for me, okay? If you rocking with Coach, especially to finish out this year, and if you plan on joining the 100K challenge for 2026, please go with the flow. Go with the trend And right now the trend is up. Matter of fact, coach gonna be the first to tell you
Just trying to figure
when the
out
trend
this
is no longer
ocean
our friend and it's going
oil
down. Okay,
company.
so
What are the
until
companies
then,
connected to?
run the plays we call in the huddle for me. Okay, but listen,
I agree.
coach
Still a bull
got
market.
I got more than
Trend is
5,
up.
but y'all family, so I'm gonna at least put 5 on you guys. Okay, that is under $100 that I want you to have and
Yikes.
make sure you are doing your thing with. Okay, so listen, to kick it off, all right, we got Sun Run. Okay, Sun Run is one that is under $100 that I want on your
Sunrun.
radar. Okay, I want you to know that it's possible to make make a lot of money, matter of fact, but that you don't have to always have to spin an arm and a leg to do so. Okay, number one is Sun Run. All right, we got Sun Run that I want on your radar. Do me a favor, part of your homework assignment. Don't do this tonight, but do this tomorrow, okay? Or do this Sunday night. Look up Sun Run for me. I want you to make yourself familiar with who they are, what they do, so that you can see why they're on this list. Okay, for stocks that's under $100 that can help you tremendously. Okay, number 2 is Wolf. Terra Wolf, if you guys know. If y'all been with me, you already know what time it is. Ticker symbol WULF. Okay, WULF. Okay, Wolf. That is another one. And so I want you to have Sunrun and Wolf on deck for me. Then, guys, don't sleep. Do not sleep. We already hit it out the park once, but we're going to rinse and repeat this next one. And that one is Lyft. Okay. Ticker symbol LYFT.
Did
All
Lyft hold
right.
up?
Everybody make sure you don't
Yeah, it's
sleep
holding
on
up
Lyft.
under earnings.
It is, listen to this. It is a slower moving play. And so there we go. I see somebody say, Charla, I see she said I made money with Wolf. Y'all, we're going to keep making money with Wolf though, guys. But Lyft is a slower moving play. And I need you to know and trust the process for me, okay? Lyft is going to pay huge dividends for you guys if you trust the process and if you run the play we call in a huddle, okay? It already popped once from $14 to $23. Now we're sitting at $20 and it's going to go to $30. Mark my words for me and rock out with coach on this play so I can help change your life, okay? That's Lyft. The next one I got is SoFi. Okay, now SoFi, listen to this, guys. If you've been with me, SoFi was something that I've introduced to you guys at $4 and again at $7. And I told you back then when it was 4 that it can go to 8. It ended up going to $9 and it stayed at $9 for a long time. But back then I was predicting $12 to $14. Boom. We are currently sitting well above $25. Okay. And so this play has been up over 300, 400, 500% for anybody that's been rocking out with coach and changing your life. Okay. But SoFi, listen to this. I want you to remember it's easy to see the end result, but a lot of people forget the journey. Okay. Remember how long SoFi took. Don't just think that it was up here like this whole time. Right? Remember, SoFi was a slow, bubbling up play. Yes, it did everything that I said it would do, but it still took a minute. Guess what? Lyft will be that same type of thing, okay? Lyft will be the same type of thing, all right? So you got Wolf, you got Sunrun, Lyft, and SoFi, okay? I got a couple more for you guys, okay? Now, these are under $100. I want you to know that you can make real wealth and build real wealth with assets that don't cost an arm and a leg. Do me a favor, guys. Get the likes up. Make sure we get the likes up and make sure we share this video because we need to reach as many people as we can, okay? Next is APLD, all right? Ticker symbol APLD, Applied Digital, is another one that's currently under 100, but guess what? It can definitely change your life. It already has changed a lot of you guys' life if you've been with me at any point in time before it got to this price. So you already know how we put it down, but I want you to know and understand that that play has more longer term room to run, not just for right now, but longer term beyond 2026 and 2027. So on any pullbacks and dips, guys, okay, I need you to be loading up. I love what I seen. Frog, he said, I got 1,000 shares of Lyft. Man, I love that. I love to see that. Ivy in Miami, what's up? What's up? Got APLD at 9. I'm loving these average costs you guys got, okay? Listen to this. Somebody asked me.
Okay, let's jump into a little breakdown here. So just make sure we're on the revenues here for this Transocean company. Trying to figure out what's going on here. Okay, rig. There's the buying out right there. Somewhere in here. I guess if it gets over 390, it gets over 4. It's a pretty big opportunity. There is one stock that is about to skyrocket. It is a $3 stock. They do offshore drilling for oil and gas. They provide the equipment. Company is Transocean. The ticker is RIG. And they just had earnings. Guidance is looking strong for the rest of the year, over $1 billion. The revenue's up. The earnings was a beat. And the chart looks like it's set up really well, even though its family of offshore drilling peers, publicly traded tickers, have not done well over the past 18 months. Recently, they're turning up the past handful of months, and this particular earnings reaction is a good buying opportunity for RIG. It's not financial advice. Let's get into it.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
They are invested in an AI company as well, Nauticus Robotics. It's not a big investment, and it's particularly a robotics for what they do, right, which is offshore drilling equipment. But this is the chart. This is what catches the eye. This is a huge move down, and if you look some of its similar family of tickers, VAL, RIG, and there's a couple more actually over here that are pretty worthwhile to look at. But before we get to those, I do think the revenue number is important. The revenue is growing year over year, beat earnings expectations, and so as far as guidance, it's good, positive guidance, and not quite as good as what you would need for a huge move up. It's not like they're expecting way more revenue, but at least they're not guiding down. So it's important to have, no sort of guidance tailwinds when you have a beat like this, where the stock goes up. I mean, the earnings per share beat by a lot. You can't always just trust just because this is a 265 versus, a dollar estimate. That doesn't mean it's like a 3 times as good earnings reaction, because there's more than just the actual earnings per share. But the important thing is, this is actually Val. This is its peer. This is what I'm talking about. Here's the beat. So this is more modest, and yeah, they have the same move, right? I mean, this move is actually larger because this is a $3 stock, but importantly, the pattern for earnings is basically a stock closes, and this is pretty near the $4 level. So you would want to say buy off this close, okay? Are we a little below it right now? We are, we're at 380, okay? But if it gets back to this close right around 390 or so, you know, it's a little murky here, no pun intended, just because basically this is a $3 stock and it's kind of a liquid. But you can see the close right there, 395, okay? So it's a ton of volume, over $1 billion of volume. So don't be confused just because it's $3 stock. I was confused initially. It's down a bunch, okay? So it was $8, and really that's why we look at dollar volume rather than just volume. So this company's only been around for, you know, 4 years. Didn't have a big run up in 21 like the technology companies. Notably, oil was one of the few companies that started, I mean, this is late 2022, but sort of had some sort of salvaging move in 2022. Crude oil itself, not so hot, but if you look at Val, pretty solid move in 2022 when the rest of the market absolutely tanked. So interesting. And I'm not here to tell you that the market might go down, but you know, oil, when the market goes down, could be sort of a somewhat of a safe haven. You know, I would say gold, except when you look at gold, we've already so extended that it coming back, you know, it could go up here, it could not. You know, this is where you're interested in gold. This is when everyone's telling you to buy gold, and was surprised we came down a little bit. So this is the level. $4 is probably the most simple psychological. Everyone's going to be looking at $4. $3.95 though specifically we looked at as for the close there, and there are some peaks here at 380, which is nice to see that it's holding that level generally, okay, and it's up above there right now because that's pretty important as far as there were buyers up here and this level is getting defended, so aka people want to own the stock above that level. Volumes not super high, so not a lot of selling volume. I mean, definitely some selling volume, but nothing crazy like you know, this. So that's positive. You know, was kind of forming into a flag. Earnings hasn't really disrupted that. There's a lot of companies coming into earnings where it's like they look great. You is one, but you can't buy this until earnings happen. So you just have to sort of wait and see. But if and oftentimes the earnings messes up the chart. So maybe it's even a good reaction. It goes up here, and then it's like you're kind of in no man's land, you know, because this is the breakout point, and this is like the level of support off this left side peak. So you can buy down here, and that's kind of where Joby is another one that's coming into earnings, and it looks great now, but it still has to actually report, and you know that could mess up the chart. So it is interesting that in the midst of this technical flag, the earnings seems to be helping the flag form. And I know this sounds like nerdy or whatever, but this is literally the supply and demand. So the more people are sort of agreeing that the price is somewhere around here, the easier it is to hop in there and then risk a little and then look for a big move up. Because there's a lot of stocks that there's just no way to get into them right now. And so when you see one, I mean, AAOI is kind of another example that's coming up into earnings. And, you know, it's a choppy stock as well. So they don't make it easy. So this is kind of a rare breed flag and earnings situation. Now, a little more just reassurance about what you're buying if you're buying this idea. Offshore oil drilling is more important as it's harder and harder to find oil and gas close to shore. That's already been built. So that's what these guys help with. Revenues over $1 billion. You don't have to look into like the vanity metrics per day or whatever like that. This is a big number to continue to have revenues over $1 billion. We've talked about these other tickers, and they all sort of do a similar thing, ultra deep water offshore drilling. HP, when I didn't mention, more onshore, but this chart looks sort of very similar to the others, very strong. Probably enough time before earnings to consider this one, except again, it's in a channel, so it's not super easy to get into unless it starts to go sideways a little bit. So maybe keep that on eye to make sure that the earnings doesn't totally wreck it. VAL, hopefully this holds up. That will help the sector. But RIG being the $3 stock, I think there's going to be eyes around that $4 level. So that could have the most energy, in my opinion. And as far as essentially, yes, market conditions affect it, but looking at the price for oil, right, crude oil futures, it doesn't seem that correlated to me. It's gone down since the spike in June. And if you look at RIG in June, it's basically gone up. See, there's the spike. So I do see some connection there, but not on like a, macro level. It's not really the right use of the word macro, but not on like a zoomed out level. Like, sure, there's some fluctuation. So if something really crazy happens, like, a war or some type of huge glut or some type of oil tariff, I don't even know how that would work with oil that's gas that's gotten from off the shore of the US. But yeah, this could get affected. But other than that, I don't think oil prices are a big deal, just based on literally looking at oil prices and the chart of RIG. And then we'll see as far as this whole nuclear, natural gas transition. But if some news comes out about nuclear, not happening for 10 years and, all these companies, all this speculation pretty much evaporates for OCO and SMR and NNE, then yeah, oil is going to be the only way to make AI happen, which is the only way for our GDP and our economy to be propped up. Currently, that's how it's working. So RIG will benefit. That's the company. That's the level. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to trial the Discord for $25, head over to stockscommunity.com, give it a shot. You'll see some testimonies from some people who did super well. And, joining a Discord, if you're not familiar with Discord, it's basically like Facebook groups. It's just a way to share ideas directly and in real time, and also answer questions. And you get access to those recordings of questions as well. Hope that helps. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. What else do we got cooking here?
This question on a coaching call, and I'm going to speak to this. Somebody said I had 1,000 shares of Lyft. I want you to have at least 100 shares of everything you hear Coach talking about. You don't have to pick every play, but the ones you choose for me, okay? Look, I want you to get your first 10 shares. Then after you get 10, you need to shoot for 25. After 25 shares, I need you to work your way to 50. After 50, let that be your motivation to get to 100 shares for me, okay? You at least need to have 100 to 125 of these if you pick one of these at least. But then the ultimate goal is to get 1,000 shares for me, okay? That's just the principles and the way we do, okay? Sunrun. You can choose. You don't have to choose them all, but I want you to know the good ones, okay? Sunrun, Wolf, Lyft, SoFi, and APOD. If you don't pick all of them for me, pick one and try to get up to 100 shares, 125 ideally. And then your next goal after you check that box off, say, boom, Coach, I did it. Then I'm going to say, okay, if it's been a winner for you, try to get 1,000 shares of it for me, okay? Now check this out. I got Irene. I call it Irene, but Irene, ticker symbol IREN, also made the list of plays that's under $100 that can change your life. Might have already did wonders for many of you, okay? QUBTS is another one that I want on your radar for me, okay? And then Uber. Now, Uber is the only one, because I've been on Uber since $20, okay? And it's touched 100, fell back below, but it's going to eventually break through and go crazy. And so if somebody needs something that's already ahead of the curve, Uber would be that last one for me, guys, that I want you guys to have, okay? So Irene, ticker symbol IREN, QUBTS, okay, and Uber. These are some of the top plays that is under $100, okay? And so I want you guys to at least do me one favor. At least pick one. Get the likes up for me, guys. At least pick one, okay? At least try to have one of these in your portfolio if you can't get more, okay? Just getting one will still do you wonders. They are.
Okay, let's talk SoFi. Earnings beat. Okay. There is one stock that's about to skyrocket. This company does lending, personal loans, student loans. The earnings beat for Q3. Since then, the price is slightly down from earnings date. However, what we've seen with a lot of companies this earnings is the earnings reactions have been sort of up and down, down and up. IBM, down, and then a big rocket up. Tesla, up after some initial move down. So, and then some profit taking. So we'll look at charts so we're not just picturing all these moves. We can actually dial them in. But all this to say, this stock is at a good spot. It's also in a really important sector for the next 5 to 10 years. Fintech, think Affirm, Upstart. And it's become one of the few banking the unbanked startups that is actually making it. So it's the unicorn that could. This is not financial advice. Let's jump into the chart.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is SoFi, right? They have connection with MasterCard, Fidelity, Visa, Goldman Sachs. You have to get your banking license, right? So a lot of these fintech startups have to partner with Goldman Sachs or the like in order to do business. Credit cards are a huge market, and you can be a SoFi member and then use Visa's debit card network. Basically, it's like a co-branded card, and you need a Visa network. You see that when people have cards with like their baseball team on them, or some of the smaller cards that provide credit to people who otherwise wouldn't be able to get a credit card. Like, if you're in a tough spot, you can get a card through like First National Bank, so it's a co-branded card. So that's what SoFi does with MasterCard and Visa. And then they also are into wealth platforms, similar to Robinhood, actually, expanding into becoming a custodian of basically retirement accounts. As far as the actual chart, this is what I was talking about. Yes, it went up. Yes, it went down. And that's even more clear maybe on this actual move where it's like initial sell-off, bought right back up. So, maybe a lot of profit taking multiple days. But the market also went down the last few days. So that's why this is maybe a little misleading. And it's like, if this seems super granular to look at the last few days, I would say, well, maybe granular, but This went from 30 to 28. I mean, that's almost 5%. So, I mean, if you put a 5% position of 500K in here, which would be 25K, and you're down 5% on that, it's over $1,000 just based on your entry. So I do think it's more favorable now that it's sort of resting on this level here. If we sort of zoom out, there's not really going to be a lot of history that's meaningful until we get back to the 2021 euphoria, which is basically, that level that I'm talking about, a little under $28. So do you want to wait for it to come down? I don't know. It did bounce off that moving average off of that level, but we'll see what happens over the weekend, depending on when you're seeing this video. If the market gaps down, the reason I'm saying that instead of if the market gaps up is that we're up a lot, right? And we gapped up here last weekend, and now we're pretty much at where we were. So it wouldn't be surprising to see us open sideways or down a little bit, but of course, never bet against a market that has just gone up. As far as peers, Affirm sort of holding in there. Our earnings are coming in higher low, but have to wait for that to happen before you do anything crazy there. And then Upstart not looking super hot. We'll see if earnings saves that. But in general, this you don't want anything to do with this. Anytime the stock is below this green line, this is the 200-day moving average. It's even on Robinhood. Comes default. You don't really want to mess with that, in my opinion. So this is SoFi. This is the chart. That's the level. And a little bit more about those earnings. You can see that earnings was a beat. Let's see if I mouse over it here instead of, yeah, there's the beat. I don't exactly know if any of these integrations are going to lead to any huge deals, or SoFi is going to get acquired, or anything like that. Sometimes acquisitions, leveraged buyouts can result in big moves up. It's more often in biotech, but we did see that with EA recently. Big move up. Certainly not what you want to bank on when you're buying a stock, but never hurts to see one of these companies have so many potential acquirers. I mean, they have all these partnerships with Goldman Sachs, which, by the way, you can sort of get a temperature check on the sector looking at Goldman Sachs, Morgan Stanley, Wells Fargo, and then maybe more closely related to technology connection to Interactive Brokers. These all look pretty strong. I mean, they just move slowly, so they're not really buyable, but they are sort of holding up. Earnings are not super amazing for any of these banks, but at least they're not selling off, and Morgan Stanley looks fine. Similar to a Netflix. We'll see. Spotify is generally the other sort of canary in the coal mine for a consumer. That's coming up. But yeah, all we really have now is SoFi and NVIDIA. I mean, I'm being a little hyperbolic now, but in terms of, what to look at, just because NVIDIA is a $4 trillion stock. So SoFi in general is going to be disconnected from NVIDIA and disconnected from the Mag 7, which all reported this week. It is going to be a little bit based on those banks, but I think most importantly, as is always the case, it's going to be based on this level. They do personal loans, they do credit cards, they do basically everything under the sun that you would expect from some type of fintech app to do. They have that under their umbrella. And I think this is pretty much all you need to know for this ticker. I'm going to keep it short and sweet for this one and just say, here's the level, 28. That's the earnings reaction. If it can hold that level, looks strong. That's the idea. If you like these ideas, hit that like button. Let me know in the comments if you like these shorter videos, and hit that subscribe if you want more. If you want to get more help, head over to stockscommunity.com and you can join us there. You'll see some of our superstars results there. It's not financial advice, but hope it helped.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam